This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Gold on Course for What Lies Ahead. Gold's price remained lower but seemed to stabilize on Tuesday's early European session. The precious metal had suffered another major correction lower after our report last week, and traders still seem hesitant to go back to bullion purchases for the time being. The idea that some changes in fundamental developments or financial data in the past days may be keeping investors in a wait-and-see position may exist. This report aims to review some of the most important fundamental drivers for the gold market at the moment. Of course, our opinion will also be a part of the outlook, and the final conclusion will be provided at the end. To start with, gold was among the instruments that saw substantial movement upon and after the FOMC meeting minutes released during the past week. In its report, the FOMC displayed reluctance to clarify their guidance on the future path of interest rates and stated that uncertainty regarding the economic outlook remained very elevated. Even though the FOMC did not say directly what exactly it plans to do and remained in a rather cryptic position, gold traders may have seen this as a sign of change for the US economy, and evidently gold moved lower while the USD on the contrary soared to its biggest daily upward movement since March. The USD has since then stabilized and seems to remain so currently. In the present week, traders expect Chair Powell's Thursday Jackson Hole speech on monetary policy frame review. The event could produce significant market-moving effects, as it is expected to include information about an average inflation targeting approach, which is a new concept on the scene. Caution is advised, as the market reaction could go either way, yet could produce further openings for traders looking to participate in short-term increased volatility. Moreover, in the following days, other important financial releases from the US can move gold's price, and it would be helpful for traders to keep in mind. On the 27th, we get the GDP figures and the PCE inflation data, both for the second quarter, and the weekly initial jobless claims. On the 28th, we get the consumption adjusted for July, the University of Michigan sentiment for August, and other PCE inflation data for July. On a separate note, the Sino US trade deal is back in headlines. The two sides were in talks in the previous days, acknowledging the fact that both should uphold their promise to carry through the Phase 1 deal. We have stated in the past that these headlines tend to increase the general market's confidence, probably sending gold's price lower. We would like to note that we maintain our opinion that headlines on cooperation between the two sides tend to reduce risk on global trade. Thus, gold's price could retreat if circumstances are favorable. On the other hand, some confrontation on other political events between the two largest economies continues to be in focus. These headlines could counteract the pre-mentioned trade deal positivity and could support gold's price. As a final note, we would like to caution traders on possible news on increased coronavirus cases from around the world. As measures have eased and more people travel, we have found information pointing to a further spread of the virus. If the situation gets out of hand, it is a possibility that governments could impose new lockdowns in order to further control the situation. On the contrary, news on the development of any effective vaccine could drop risk and consequently weaken gold's price. Traders should monitor updates on the matter and watch how gold's price responds in case of a surprise. Moving now to our technical analysis, this is gold's 4-hour chart. Now, gold is currently trading between our R1 1940 resistance level and our S1 1915 support level. In case of a rise above the R1, then gold could move towards the R2 1960 level last seen on the 24th of August. Even higher, the R3 1980 line could also become a target in an extensive bullish run. In the opposite direction, if gold is to move below our S1 level, then the S2 1900 round number level could be next. Even lower, the S3 1880 line could become a stop point for traders. Please note, a breach below the S3 level could signal the current sideways motion we have as an outlook has changed to a bearish view. In any case, the precious metal has been moving in a sideways motion between the R2 1960 line and the S1 1915 level since the 19th of August. Please also note the RSI indicator below our 4-hour chart is currently nearby the 40 level, implying a sideways motion with bearish tendencies could be currently the trend. That's the end of this report. We hope you enjoyed it as well as found it useful. From me, Angelo Zittis, and everyone here at IronFX, wishes for solid trading.